We see that according to the federal funds futures, the probability of December rate hike is above 80%. And if we look at Wall Street Journal survey of about 60 economists from the major banks and other entities, we can see that here also more than 80% of the surveyed people think that the Federal Reserve will increase rates this year in December. It seems that the market has now almost fully priced in December rate hike by the Federal Reserve. The market is so is in a kind of rush at the moment, buying the US dollar, selling bonds. We saw that US Treasuries, 10-year Treasury yields rose to the highest level since January. Also, traders are selling emerging market assets and bonds especially. And according to Bloomberg, the decline in the bond market capitalization of the world bond market has declined by about $1 trillion during the past week. The thing is that investors all over the world think that Donald Trump will make a rather simple policy decision, that he will just increase spending on infrastructure and other projects. And this increase in spending will provoke a rise in US inflation, and as a result, people think that it's not wise to hold bonds which have fixed incomes and low yields. They sell government bonds. As a result of this selling, the price of the bonds goes down and the yields of the bonds go up, and high yields increase demand for the US dollar as a currency. The expectations that the Federal Reserve will raise rates and make America actually third central bank among the developed economies with highest interest rates also increases demand for the US dollar. So basically what is happening now, there is a rush, a trend to buy the US dollar on the expectations of higher inflation everywhere in the US and maybe even in other countries, and the US dollar is a kind of good bet, taking into account that American economy should benefit from this increase in government spending. Of course, this projected policy of Donald Trump still looks very controversial, and actually I think that this trade to buy US dollar won't do the market players any good in the long term and maybe even in the medium term, because on the one hand, higher treasury yields increase the pressure on the US economy. It makes it's more expensive for the US government to borrow money, and surely the Federal Reserve will see the risks which are associated with higher US debt cost and higher yields on US bonds. So the Federal Reserve may be not so eager to raise rates. After all, they have made a lot of effort to keep US yields at the low levels, to keep US rates at the low levels, and now this is being challenged. Such approach is being changed. In addition, we know that Donald Trump's trade protectionism is a kind of dangerous policy, and all of this together can really hurt US economic growth. and increase the market's risk aversion. So for now, maybe during this week, this trend to buy US dollar to look for higher yields may continue, but in the medium and longer term, safe haven assets may once again become popular. If we return back to the economic calendar, it will be very important for the US data to confirm that US economy is on solid footing and it is ready for higher rates. And also it's very interesting how the Fed's chairwoman Janet Yellen reacts to this change in the nation's political environment, and whether she emphasizes that the US economy needs higher interest rates, or she tries to be more cautious. A more cautious approach of Yellen will be a very negative signal for the US dollar, which is becoming overbought, while her desire to raise rates will strengthen the current bullish trend in the US currency. Earlier last week, Vice Chairman of the Federal Reserve, Fisher, said that inflation and employment have moved closer to the central bank's targets, and the Federal Reserve is now more ready to raise interest rates. So his comments were rather positive to the US dollar. Also, if we look at the statements of the ECB President Mario Draghi, it will be very interesting to see what he has to say, how he will react to the US election outcome. And for now, the situation has become rather favorable for the ECB and the Bank of Japan, because the currencies depreciate versus the US dollar and thus decrease the pressure on the central banks to ease monetary policy further.